So I had a LEAPS on NVIDIA and I sold it back yesterday, and it looks like I made a pretty good deal, but I did open another LEAPS and I want to show you that one. Hello, my friends, this is Legend. So yesterday I did close my NVIDIA LEAPS. Now this is a LEAPS that I had opened last week. And if we look at my spreadsheet right here, I'm tracking the ones that I do have, the ones I've closed, and the ones that are still open. And you can see right here, this second NVIDIA LEAPS, that's the one that I did close yesterday. It had an expiration date of November the 20th, and it was a 150 strike. I paid $48.90 per share for 100 shares, so therefore I paid out about $4,800. And as you can see, I did close on February the 9th. Now I opened this one on February the 3rd, so the difference between those is about 6 days. And in 6 days, I made $934.89. And that's after my fees were deducted. That's a 19% earned on that move alone. And if I wanted to calculate that out to a yearly ROI, and that's an estimated yearly ROI, right? Because it is closed. But if I took that amount and calculated that out to a year, that's a 96% on my money for that calculated yearly ROI. That's awesome, right? But what I actually made on it was 19%, and that was just over $900. That's a nice amount of money for just 6 days. And of course, it's not the only one that I have closed. I had a previous NVIDIA that was a LEAPS as well. It was a 105 strike that I did pay $95 and sold it actually for $105. So this one is a little confusing because my strike was 105 and the premium that I sold it at was at 105, which the 105 minus 95 gave me about $1,000 on that play. And the IBM LEAPS that I had, I opened that one on January 23rd. It was a October the 20th expiration date with a strike price of $280. I paid $39.75. I sold it for $55.35. What a move on that one, right? That one earned me $1,559, and that's a 39% gain on my money just for that trade. So as you can see, I've already earned a total of about almost $3,500. Total invested capital about $9,400. Now that's the amount that I have currently invested, okay? Because the other ones are closed and the ones that are actually open is money that I still have invested. So that's roughly about 37% on my money. And if I wanted to use the entire capital that I have used since I have started these LEAPS, so this total amount, which is about $30,000, and that is money that's been going in and out, right? So it's not a total of $30,000 that I needed because I didn't have all of these open at the same time. But if I were to use that total amount, then that $3,500 is about 12.5% of that amount. So however you want to calculate it, it's been doing pretty well. Now I still have a few open. I've got Visa is still open. That one I opened on January the 13th. The IBM I opened February the 3rd. And the one that I opened today was Google. And it has an expiration date of January the 15th of 2027. And that's a strike of $310. I paid $53 per share, so that's $5,300 that I paid out to buy that LEAPS on Google. So since that's the one that I just opened today, let's go take a look at the chart and let's see why I picked Google and why I bought a LEAPS on it. And here we are on Google. And if you've watched any of my videos, you can already tell why I decided to buy into Google. It's at the bottom of that Bollinger Band, and that RSI2 is under 10. So that was one of the deciding factors of getting into this one. And if I scroll out a little bit, you can see that right here is a bit of a support line. And that is about right where we bounced off of, okay? This is that today's candle right here. And that bottom of that candle is a pretty good support over here. Now, of course, we do have this candle here that did drop all the way down here. And you can see that we do have a bottom here, and the bottom of this one would be another strong support, and that's around that 296 area. But I am playing this one as it being at the bottom of the Bollinger Band. It's really close to this support line right here, and I could have waited to see if it would have come down to that support line, but I wasn't sure if it was actually going to get there or not. Since it was at the bottom of the Bollinger Band and that RSI2 was below 10, I went ahead and I took my shot at getting a LEAPS on Google. And what did I set my strike at? Well, I picked a strike just below this support. And that support is around 311, something like that. You can see this price right over here. When I put that line about right there, it's about 311, 312 area. So I picked a strike of 310. Okay, so let's go take a look at the options chain and let's just see what that 310 would cost. So going to the options chain, we're looking at all of the available expiration dates. And I went out about a year right here. And you can see there's my little P for position. So let's open this one up. We'll scroll right on down. And as I stated, I picked the 310. And I showed you why I picked the 310. You can see the bid ask and then the mid. Right here's the mid. It's roughly about 52.20. And that 52.20 is usually about the midpoint between the bid and ask. And that's usually what you try to get it at. Now, since Google did drop down a little bit more toward the end of the day, therefore, this price did go down a little bit, and therefore I could have got a little bit better price for it, as I paid 53 and right now it's worth 52.20. So I definitely don't want to sell it, right? Because it's under the 53 and that would be a loss. But I'm nowhere near the point of where I want to sell it anyway. Because if I go back to my charts, what am I looking for on the sell? Well, if this is a support line right here, I'm looking for this to possibly even come down a little bit, get close to about that 312 area, and then bounce. That's what I'm looking for. And then where am I looking to get out of it at? Well, that's up to each individual, right? For me, if I can get 10 to 15% on a play, I'm going to go ahead and lock it in because that is some good money. Especially if I can calculate that out and get more than 3% in a month, as 3% a month is one of my goals. But in a lot of the cases, especially whenever I'm catching it down low and then it pops up, I'm definitely getting more than 3% in a month. But you got to have a target. And that 3% is my target. But whenever I'm catching it low like this, if this thing does pop back up, I'll be looking to sell it if it can get up to around that midpoint or above. And if I feel like it's getting ready to hit another resistance line, and that resistance line could be about right there at 337. But wow, could you imagine if this thing did pop back up to 337? Because if it did, that option is going to be worth a whole lot more. But as you can see here, this price is at 318. So as that price does increase, then my option of 310 moves further and further away. And what happens to that mid price right here, which is the middle of that bid ask, as it moves further away from that actual price of the stock, as it moves further, what is it doing? It's going up in price, right? 52.20 is currently what it's worth, but if I move it up, say about 20 bucks, right? It's then worth 63.28. And I bought it at 53, so that would be a $10 move times 100 shares, and that's $1,000 right there. So if this thing moves on this chart and it jumps back up to that midpoint or above, and if it does it quick enough, I'm selling. I'm not waiting to hit that home run. It could continue to run. And some people would say, well, why don't you set a stop or something like that on it? Well, the one issue with the stop is if you look at your options chain, your bid ask, the spread is just so wide, right? 51 to 53, almost a $2 spread. Well, if you set your stop thinking you're protecting yourself, well, what happens is you get stopped out on that low end because that spread is so wide and you end up losing a little bit of money. But when you have a spread like that, I don't want to use a stop because of that wide spread and it will kick me out on that low end. I would much rather it get to the point where I like what it's paying and I just go in and I just close it and I take it and I'm able to set my price. I can go in here, pick that midpoint or somewhere around that, close it out and take the profit. But currently, I do need Google to start moving up in order to make that positive difference in that premium. But do note, I have until January of 2027. I've got a while before this one is going to come due. But do I have to hold it until January of 2027? Nope, I sure don't. I can let this simmer, move on up. I can ride this thing out for almost a year and not even have to worry about it if it just continues to move up. But I'm not going to play it that way. I'm hoping to get out of it as quickly as possible, make that premium, and move to the next. So I hope that helps you to understand how I am selecting the strikes and how I'm also picking which stocks to use. When it hits my indicators, then I'm looking to see overall, is this stock going to move up? Because on buying a LEAPS, I definitely need it to move up over time. But with Google, I don't think I have a problem. But of course, that is not financial advice, as any stock or ETF could drop in price and could cause you to lose money. But for me, I bought the LEAPS and I'm excited to see where it's going to go. So if you'd like to get notified whenever I do make these trades, come on over, join my Discord where I do notify my Discord members. I tell them exactly when I get in, I tell them what strike that I've actually picked, and I show the receipt on that. So if you'd like to join the Discord, come on over. Links down in the pinned comments and in the description below. And also don't forget that by joining, you will also get access to my stock tracker sheet for those high yield ETFs, as I use that to track my high yield ETFs to know where I currently sit in each one of mine. So I think I'm going to wrap it up right there. If you don't mind, hit that subscribe button, smash the like button. It would be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.